Hi, this is Peter from Game of Trades, and in today's video we're going to take a look at this chart right here, because if you were an investor in the stock market for the past 50 years and you use this price channel to time your entries and time your exits in the stock market, you would have timed the market perfectly. So we're going to discuss that today. We're going to take a look at this price channel in detail, discuss how important it is and exactly how it's coming into play right now, and what you can do as an investor about this. And we're also going to be taking a look at the fundamental picture relative to the stock market and how that all fits with this price channel and what's happening right now. So without further ado, let's get right into it. So this price channel really begins back in 1974, and it really starts to take shape in 1978, 1979, and 1980 right here. And you can see it's a pretty well-defined channel. It acts as support and resistance here. It topped here, the markets topped in 1987 as they were testing that line of resistance. So this is a valid channel, which is actually very impressive. You don't tend to see many price channels like this on the monthly chart. So this is something we've been studying for the past few weeks, how well defined it is and how it's coming into play right now. So again, this is what we're going to be discussing in today's video. You can see we had a brief break back in 1982 right here. Then it popped back above, back tested, and ran all the way up in 1987. It held as support 1, 2, 3 times before the dot-com bubble, and there it took off, broke out above the price channel. Here you have a breakout, back test, resumption, another back test, resumption. And in fact, we can take a look at the NASDAQ on top of this chart, and you can see the exact moment where the S&P 500 broke out above this price channel. That's really the moment that the NASDAQ 100 started to take off right here and head into bubble valuations. And you can see right here, even the blue line in the middle acts as resistance when tested from above and support when tested from below. You can see this breakout, back test, and resumption. So all these lines along this price channel act as support. You can see right here when it broke down, back tested, this is yet another reaction on that channel. Same thing here, breakdown, back test, support, support, resumption. And what's even more fascinating about this price channel is that you can take the exact same angle of that channel and apply it to this current bull market. And this is something we've been taking a look at over the past few weeks, and it's actually the only well-defined channel on the S&P 500 on the logarithmic scale. And by the way, this is the log scales. If you want to take a look at these charts, you do have to activate the log scale. On the standard scale, we've been taking a look at this trend line right here. And this is what has helped us really identify where the stock market is at on this channel and on gameoftrades.net. Right here, we had a beautiful breakout and back test, and that is when we knew that the markets were heading much, much higher on the S&P 500. And we had the same thing on the NASDAQ 100 back in July, I believe. But you can see the log scale paints a completely different picture. We're currently testing that line of resistance. So I'm not making this video to say that we're going to be rejected and that we're going to see a drop all the way back down to the bottom of the channel. I'm making this video for you guys to be aware, right? We're going to take a look at some of the fundamental factors that are playing in the markets right now. So make sure to stay to the end of the video to really get that full picture. But right now, the two scenarios is make or break. So if the stock market breaks out above in a melt up move, what you're going to see is a breakout, back test, and then again an acceleration of that uptrend. Again, similar to what we saw back in the dot-com bubble, where you had the NASDAQ really start to take off after it broke above that price channel. So this kind of breakout above the price channel will be extremely bullish for the S&P 500. Now, if we get rejected of this level here, because we are in an overextended trend, right? We've been rallying up for multiple weeks. If we get rejected here, we could see a move back down to that blue line, right? And so that wouldn't be a full crash. It would be around a 10% correction from current levels, and that's actually a typical size for a stock market correction. So if we see that kind of a move down and then we hold a support at that blue line, it could still be a very bullish setup for the S&P 500, because fundamentally, right, and we've been saying this for quite a while, the stock market is set to rally higher as long as we stay in this low interest rate speculative environment. The only thing that can stop the stock market from continuing to rally higher into hyper valuations is inflation. When we see a big inflationary spike, and we think that could come as soon as spring or summer, when the economy really starts to reopen and you start to see the stimulus come out, and you start to see not only the stimulus but also the savings from the health crisis come into the economy, the velocity of money will pick back up and you're going to see an inflationary spike. So we're going to have to see how the Federal Reserve is going to react to that kind of environment. We think they're going to step back from the easing, and that's going to create some problems on the S&P 500 that's gone too far, too high for too long. But we're not there yet. Right now, we're still in that low interest rate, low inflation environment. And so we're keeping that bullish bias fundamentally. And by the way, make sure to like this video if you're so far enjoying this content. It really does help our videos get pushed out to a wider audience and makes our effort working on these videos worthwhile. And also make sure to subscribe if you haven't already. We post multiple videos on the stock market every week, covering different opportunities in the stock market and also outside the stock market. We teach you how to read charts properly, analyze fundamentals, and most importantly, how to profit from all of that. So now let's get back into the video and take a look at some of those fundamental factors that we talked about, and starting with the global chip shortage that we've been seeing in February 2021. And this is really an interesting phenomenon that we're seeing with the current position of the stock market at all-time highs. Why do I say this? Because a chip shortage is what you tend to see after a recession, right? And none of these articles will tell you that, but from experience, we know that back in 2010, we had a very similar scenario, and it's a sign of demand springing back up unexpectedly after a recession. And this is what's happening right now. Big demand. Now, obviously, this is being fueled by the health crisis, which is shifting business models to electronics and boosting demand for computers. But this is definitely something to pay attention to. And I'm going to show you what I mean right here. This is an article we found back from 2010. So this was right after the 2008 recession. And so we also had a massive chip shortage. So manufacturing had been cut down during the recession, and in 2010 you started to see demand shooting back up. So this chip shortage that we're seeing right now is indicative of a strong economy. It's telling us that the economic recovery from the health crisis is actually pretty strong. Now we can take a look at another fundamental factor. Now I do have something else to show you, and that is the lumber futures that are currently at all-time highs, right? So this is something that we've been following very closely over the past few weeks on gameoftrades.net with our members. And the simple reason for that is because if you have strong lumber prices, it means you have strong demand for housing. And if you have strong demand for housing, it's again indicative of a strong economy. So seeing these types of large moves in lumber futures is another sign, very similar to the chip shortage, that consumer demand is high. Now again, very similar to the chip shortage, this is a sector that has been affected by the health crisis, right? People are moving into homes, coming out of cities, coming out of apartments and buying homes, which is boosting lumber futures. And it's also been negatively impacted by the shutting down of production throughout the shutdowns. And so you had a slowdown of supply and demand shooting back up because people want homes, and you've got stimulus and low interest rates boosting all that together. And we now have lumber futures at all-time highs. So why are we talking about all this? Because these are the factors that investors look at when they determine their investment strategy. And so when investors see global chip shortage, they see strong lumber future prices, they tend to adopt an investment strategy with higher risk. And this is exactly what we've been seeing over the past few months. It's been a very risk-on environment, especially again with the easy money environment that we're currently in. So does that change anything about the stock market being in extreme valuations and being completely dependent on the low interest rate environment we have? No. You have to consider this like a game of musical chairs. Investors are going to want to take advantage of the strong economic recovery and price in a strong stock market as long as we have all this money flowing in. And this is going to continue until we see a large spike of inflation, which could lead policymakers to step back from monetary and fiscal easing. And once they start stepping back from the monetary easing, investors are going to realize that the markets have priced in too much growth. Now, we've been focusing our investment strategy at gameoftrades.net with our members on precious metals, on emerging markets, on cryptocurrencies. And so if you're interested in finding out more about our investment strategies, make sure to go check out our website at gameoftrades.net. We do have a free trial for the pro version. And if you're interested in interacting with us, asking us questions, making chart requests, and specific analysis on stocks, you can also take a look at our trading room membership. Now, that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.
So, you want to invest in the cryptocurrency market, but you don't know where to start? Welcome to the co-vesting module on Prime XBT. The co-vesting module helps investors and talented cryptocurrency traders find each other. With an easy-to-use interface, you can compare and replicate successful strategies with a proven track record. You can follow multiple trading strategies to diversify your risk. Co-vesting module on Prime XBT. They trade, you profit.